Well, investors are eyeing South Africa's February inflation print that comes out tomorrow, and this ahead of the SARB's monetary policy meeting where the print could play a role in the next interest rate decision. RMB Economist Siobhan Redford joins us now for a preview of the SARB's monetary policy decision. Thank you so much for your time, Siobhan. Now, I had to get my dates right because you would expect that MPC decision to come out this Thursday. But we are on holiday this Thursday, so the SARB turns out that they'll also be on holiday. So that is coming out next week. But let's start off with that inflation print that we are expecting tomorrow for February. What are your expectations of it? What are you forecasting that picture to look like?
So we're expecting an increase in inflation from 5.3% that we saw in January to 5.6%, which is a little bit above the consensus. Basically, it's one of these things where we talk about kind of that bumpy road back to target, what the SARB kind of spoke about last year. And it's, we have had weaker exchange rates, we've had higher oil prices, and that's contributed to increases in your fuel inflation, which has put a pressure on on prices and generally inflation, just as, kind of the food inflation, which was pushing inflation higher last year, has been coming down.
Now, just talking about that oil market, how much of a risk does it present for the SARB, or is the focus here on core inflation?
So I think that's a very good question. The Reserve Bank are going to be quite cognizant of where headline inflation is, because they worry that if it remains elevated for a long time, that this then leads to a change in inflation expectations. We saw them actually pipping up towards the end of last year, and that then goes into your kind of wage demands and wage settlements, and then that also goes into your price setting. It's called a wage price spiral. So expectations push these things up, which actually leads to higher inflation. So actual inflation, headline inflation, is going to be a concern for them. However, why they're going to look at core and why core does matter, and if it doesn't pip up all that much, that is going to be an important measure to keep an eye on, is that it is going to show that you aren't seeing second round effects from higher oil prices more generally across the economy. And if that is the case, it does suggest to them that they are, that you aren't seeing a more generalized inflation, which is led by demand and higher prices and higher expectations.
Yeah.
So it's going to be both. They will be concerned about both, but it's core inflation is going to give them a sense as to how well the current policy setting is actually working.
Yeah, I would assume that either direction of the inflation print tomorrow will not sway the SARB's interest rate decision, because expectations are for that to be kept unchanged. But could it affect the tone and the outlook for the path moving forward?
It's unlikely to have a significant impact. Unless there's a really big surprise, really big miss, then that, could have an impact. But it really is quite likely that they'll be like, this was slightly different to what we had expected. But, we still think that there's going to be the same kind of dynamic. So, markets are still expecting, in the absence of any major kind of regionalization of the conflict in the Middle East, that your oil prices, will remain kind of where they are, possibly a little bit lower than we've seen them today, with Brent crude pipping up to over $87 a barrel, which is quite high by its standards. But, there would be an expectation for it to probably come down. Also, with the rand, which is another significant factor in terms of our fuel prices, that is going to also recover back to below kind of 19 levels, and possibly even further after elections. So I think that if that's what they continue to expect, if they think that short-term kind of shocks are not going to lead to long-term changes and dynamics, then we shouldn't see much of a change.
Siobhan, talking about elections, could there be any election risk that influences the tone of the SARB?
It most likely is not going to have an impact on the tone of the SARB, not at this coming meeting, and not even at the next one. The SARB is apolitical. They are going to be setting according to what they expect is going to happen to inflation. Now, if bets by markets and such like move the market in such a way that it could influence inflation, you're going to hear their response to that. Not necessarily to kind of political plays or the what has been said politically, but rather the impact that might have on markets and hence how it could affect inflation.
Yeah, and Siobhan, we're also waiting for the Fed to come out with its interest rate decision before the South African Reserve Bank. And I'm wondering, I mean, from the last time we spoke until now, have your expectations for rate cuts shifted in any way for the SARB? And also, does the SARB have no choice but to wait for the Fed in terms of the path to interest rate cuts?
I think this is the favorite question out there right now. How closely linked to the Fed are we? So we have actually pushed out our expectations for a Fed cut out to June, which is more aligned with kind of where markets have moved to now.
Yeah.
However, we still are expecting a cut in July from the SARB. So, it hasn't really changed our view as yet. That said, I think that the risks are really where the interest lies. I think that the risk is that we could see our interest rates staying, say, higher for longer, and the same with the Fed. And it's not that we are going to keep, that our concerns are about the Fed. Obviously, what happens with the Fed influences global markets and influences, the pace at which we see kind of looser monetary policy affecting consumer demand in the US and hence, demand for commodities around the world, how that might change. And so, it is going to be definitely a consideration. But if, say, we see continued stickiness in US inflation, but ours comes down quite a bit faster, then there's no reason that the MPC don't have to start cutting. However, if they are worried about stickiness in our inflation, based on a number of factors, including what's happening with the exchange rate, fuel prices, and imported inflation, that will have an impact then on their decision and the timing of cuts. And it could then, look far more similar to what the Fed is doing, just based on the fact that a lot of these factors are similar across a lot of markets right now.
All right. All this happens in about a week. So, of course, we will be getting an update on that next week. Thank you so much for your time, Siobhan. That was RMB Economist Siobhan Redford.